Well, that is Revenue Secretary Sanjay Malhotra in conversation with my colleague Timsy Jaipuria. The message from the government is very, very clear. Don't be lethargic about moving from the old tax regime to the new tax regime. The government believes that they have put enough sweeteners in place so that people move to the new tax regime, which is now the default scheme. Of course, the option to stay with the old tax regime continues. But my star panel here with me, Sanjeev Puri, Sanjeev Bajaj, Janmejay Sinha, and of course our budget editor, Tarun Bajaj, is right here with me. Sanjeev Puri, there was a little bit of a scare for you when she announced that 16% hike in the NCCD for specific cigarettes. The stock reacted sharply, but then has recovered, coming off its intraday lows. On balance, what does that mean for ITC?
Well, I think, first of all, Shireen, I won't want to really get into company-specific here. I think we're all really participating from CII for broader discussions.
I know, but since that was a very specific announcement that came in that impacted ITC.
I'm happy to have another conversation with you, but let's keep this, otherwise I know this can go on for some more time.
No, just an initial comment, but on balance, what do you make of that?
Let's keep it for another conversation.
Okay, we'll keep it for another conversation. Sanjeev Bajaj, the wish list has been delivered on. Whatever that CII had put on the table by way of recommendations, the finance minister has delivered on. But specifically, I also wanted to understand if you are concerned with the fine print on insurance policies above 5 lakh rupees of income being taxed, because stocks are reacting to that. But first, your big picture view on budget 2023 and then the fine print.
A big picture, very much a budget that balances growth with fiscal prudence. And as you mentioned, Shireen, a number of CII recommendations find their place in the budget, from the public capex increase to 10 lakh crore, whether it is rationalizing of personal income taxes at the lower level. We are seeing significant focus in agri productivity and efficiency, actions on the green energy industry and opportunities there as well. So overall, I would say very good, and at the same time sticking to the fiscal deficit target of 6.4% this year and aiming to go below 6 to 5.9% next year. So this is a welcome balance that we are seeing. A number of other initiatives as well, continuing the central guarantee, the credit guarantee scheme for MSMEs, expanding that by 2 lakh crore. That's a welcome move, because as growth comes back, MSMEs will find this as a significant support to get growth in. The focus on urban infra. We talk about ease of doing business. We very much talk about ease of living as well. So improving urban infra, the support to the states, but linked to performance with timelines, as well as the development of the mini bond environment. All of them are
Chatterjee's bucket list. I think virtually everything on his bucket list has come through, right?
Very much so.
So Sanjeev Puri, on balance, growth acceleration, that seems to be the thrust as far as the budget is concerned. Infrastructure development, trying to drive investment, again, delivering on that front on account of the kind of allocations that we've seen?
Absolutely. I think it's a very progressive, growth-oriented budget. I think it continues the vision and the path that the last budgets have taken. So it's building that momentum. And I think certainly it augurs well for the economy. Sanjeev has covered a few very important issues. I just like to call out a couple of them. I think it was very nice to see the focus on tourism and the whole idea of developing 50 model areas where tourism can be developed, because it has got tremendous economic multipliers. Whole ecosystem will create a lot of small and private entrepreneurs besides, the infrastructure-oriented projects. So that's I think, a very welcome development. The second, agriculture, you see, has always received a lot of attention in the budget. But what I'm really happy to see, over and above whatever has been happening, is two things. One, I think, is the sharper focus on bringing technology into agriculture. So the support to agri-tech, agri-entrepreneurs, and developing the public digital infrastructure for agriculture. I think that's a terrific move. And the second is this whole move towards a cluster-based approach. Cotton has been taken as the first value chain. And that is the only way, in my view, that agriculture can be transformed. FPO as building blocks, cluster-based approach, and hopefully with this experience we can take it to other crops over a period of time. So I think overall, very good budget, and it's not just about looking at the agriculture or tourism sector, but a lot about the social infrastructure, a lot about inclusive development, a lot about local level development. I think these are really good developments that augur well for the economy.
Well, you're right. After 7 priorities, inclusive development was the #1 priority that Finance Minister Nirmala Sitharaman put on the table. And I cannot remember a single budget that has spent as much time as it did on millets, on a single grain. There was so much conversation and so many announcements that came in from the Finance Minister on millets. But I would imagine that's another conversation that you and I need to have, because I know that that's something that ITC is focused on. But Janmejay Sinha, let me come to you. You're perhaps the only one who's disappointed, because your big hope on the banking sector of the government bringing down its holding, that hasn't gone through. But otherwise, I mean, you cannot quibble or argue with either the budget numbers or the direction.
So I completely agree with both the Sanjeevs on the overall macro, movement of the budget. There are 3 things which are not catching the attention, which are really important. She said that she wants the regulators to review their regulations, taking public input. I think it's time for the regulators to start taking public input on their regulations and starting to make them consistent. I think that's a very big announcement which hasn't really captured the attention. The second thing which is really important is India may be the only country in the world which may start empowering its citizens with their data to make them have wealth.
Yeah.
And she said that you can have a central repository of data which the citizen will allow different government agencies to access. That mindset is really critical, because Indians will become data rich before they are rich. And so that data should be allowed to make them, get some of the wealth that they allow others to get. And the third was the accent on transition to green. I think, after poverty, green has to be the next most important issue for India in all the different elements, with regard to water. The cleaning of those, the sewage and the sewage treatment plants. It's really important, because water will become a binding constraint for us. So some of these things were a bit subtle, but they were out there. And the fact that it was uneventful is great for a business, because you can plan and predict. And for the last 4 years, the government has actually managed to do that. And for that, we can't, really thank it enough.
No, I think you're absolutely right. Tarun Bajaj, I think that there is consensus that predictability has become the norm as far as the last few budgets are concerned, and this budget builds on that. So it's really an exercise, a continuum, so to speak, and that's what this budget seems to have delivered on as well. Many interesting aspects coming in here from industry, but let me also welcome the Sherpa to the G20 and the former CEO of the Niti Aayog, Amitabh Kant, because as the Finance Minister pointed out, the budget is also aligning itself to India's aspirations of leading the G20, as the presidency of the G20 is with India. Mr. Kant, always a pleasure. Appreciate you joining us here on CNBC-TV18. The Finance Minister talked about India's G20 presidency and, of course, thrust on infrastructure, thrust on public capex continuing, inclusive development, health, education, 157 new nursing colleges, centers of excellence as far as artificial intelligence are concerned, and of course, mission mode on tourism. That was the big message that the Finance Minister has held out. Your first reaction, Mr. Kant?
So, Shireen, I think this is a budget truly for a new India. It's heavily focused on capital expenditure, 33% jump with 10 lakh crores. That's one part of the story. The other part of the story is that it's really going to, with all these exemptions and, on the tax side, it'll drive the consumption story of India, which is very, very important and significant. And thirdly, to my mind, the huge focus on urbanization, which is very, very important to my mind, and travel and tourism. These are key focuses. But I think the real highlight of this budget is really about going digital across the board. It's not sector specific, but across the economy, and going green across the economy, because it's about digitization and going green, which is going to really put India on an accelerated path of growth. And that is what this budget spells out. The tech transformation story of this budget is quite enormous in terms of energy storage, in terms of pump storage, in terms of battery storage, in terms of a whole range of new areas of growth, electric mobility, green hydrogen, all the sunrise areas of growth which will enable India to technologically pole vault in many ways. So that is really the defining feature of this budget.
Yes, there is a lot of thrust on the digital infrastructure, as I pointed out in the budget. But Mr. Kant, I also want to understand from you on tourism specifically, because that will be linked very closely, of course, to what we see happen as far as the G20 is concerned. I haven't seen the allocation just yet, but she's also talked about the need for greater public-private partnership in the tourism sector. What would you like to see happen from here on now that it's been given mission mode status in the budget?
So two key things on travel and tourism. First and foremost, the budget talks about 50 key centers of growth which will be selected through a challenge route to drive growth. And second is about a very key strategy for promoting travel and tourism. The third one is about skill development in the travel and tourism sector, which is about really employment creation, because tourism has a multiplier impact. But the important thing about travel and tourism is that the expenditure that you make on capital, on infrastructure gives it a huge thrust. So, 3 years in a row you are focusing on airports, you're focusing on rail. I mean, look at 50 airports. Look at the huge amount of outlay you've provided to road and rail. That will have a massive, massive impact on travel and tourism in due course and make India an outstanding country for domestic tourism, but also for international tourism. That is really the key. The infrastructure side of growth story of India will have a massive multiplier impact.
Mr. Kant, always a pleasure. Appreciate you joining us here on CNBC-TV18 with your quick take on the impact of Budget 2023. We will, of course, come back to you for further details. But Sanjeev Bajaj, Mr. Sinha and Mr. Puri, what I want to understand from you is on the disinvestment side, because there the expectation and the ask was that the government should bat higher. It's kept it at about 61,000 crore rupees, pretty similar to what we've seen. What do you make of that? And it also explains the fact that the government acknowledges that this is a complex exercise. It is a challenging exercise, and so it's mindful of not just putting any number out there which you then don't achieve.
Very clearly, it's an acknowledgement that it's a complex exercise. The good thing is that the announcement that are already made, there is no opposite direction over here, so hopefully those go ahead in time. It's also, I think, a implicit acknowledgement that we're going into election year. So yes, that was one ask that didn't get met. There'll be time to ask again.
Sanjeev Puri, do you walk out of this budget feeling even more confident than you were at the start of the year? How has this budget changed the needle for you specifically?
Certainly, one is more optimistic now because there is consistency, there is certainty of the way the economy is going to pan out. It's a very growth-oriented budget, a lot of investments happening into the economy, a lot of facets to enable the economy.
Will it accelerate investments further? Because that's been the hope that private capex should now start to move.
Absolutely. There are always, it's already started in small measure, and capacity utilizations are above 70%, and a lot of interventions have happened in the past, be it the tax rates and so on and so forth. So I think this is really setting the pace for private sector investment to really come in.
Sinha, you highlighted some of the subtle elements, but if I were to ask you for the headline that captures Budget 2023, what would it be?
I actually like the word that Sanjeev used about the fact that it is both prudent and growth-oriented. And one thing that we are not highlighting enough, that the world was looking at India this time, and the fact that we've managed to stay prudent and yet invest in the places which the world is actually looking for, ease of doing business, infrastructure, that the economist has said we are the best country in the world, etc., for investment right now. So that just gets reinforced. So we are building on that positive global momentum.
You know, and I think the Prime Minister had sort of given us a hint that this is going to be a budget that not just India but the world is going to be watching, and so it would have been odd if the government had deviated from fiscal consolidation, etc., which it has not. It has stuck to that glide path, but the market's clearly reacting to all of that, and of course the many budget announcements. Lata, tossing it back to you.
Actually, the big loser here, the market meanwhile has seen a decent amount of profit taking. The Bank Nifty went up 3.3%, now it is up 2.3%, and the Nifty as well was almost 1.8%. At the moment, it's just about 1%. So a bit of creaming of profits has happened, but a big deal of creaming of profits has happened in insurance. Mr. Kanabar, if you can explain, HDFC Life has lost about 7%. Why are they losing so much?
So again, I'm not a market analyst, but I'll tell you what are the budget impact. There are two impacts. One is that when everybody moves out of the current tax regime where you got a deduction for life insurance premium and you are now going to move to a new regime where you will not get such a deduction, then obviously money which is going only for tax purposes will not go, and that is a very, very substantial number, the amount of deduction which is going under Section 88, etc. So that's one part. And second is this entire proposition that if you have taken insurance policy for which the annual premium is more than rupees 5 lakhs, then when you get back that money, it will be treated fully as taxable income. So that makes another thing. So the high value policies which were taken by people, which ostensibly the government believes is not really an insurance policy, but a savings policy, the income coming back, the money coming back to you being income taxable, which would mean that people will not go for those high-value policies. These are the two things which are likely impacting insurance.
Do you think
companies.
people will move in a significant way to the new tax regime?
I would think so. I would very much think so.
This is clearly
just imagine that you're going, first of all, exemption 2.5 to 3. Almost till 7 lakhs, you don't end up paying any taxes at all. Everything is moving towards. So the government is just prodding everybody to go in that direction. And it looks like people will go there.
And she said that up until 7 lakhs, I think you don't pay any tax.
Absolutely.
Because you have an exemption which is higher, plus you have the other deductions like standard deduction. Okay, I mean, Ashok, if you can explain this capital gains and, the disadvantage to NBFCs again, I think that was missed out.
So let me talk about capital gains first. Currently, the law provides that if you divest and have a capital gain, regardless of the amount of capital gain, and you invest that gain into a residential property, then you are fully exempted from that gain. So let's take a simple example of I have a house, I sell that house and make a 10 crore gain or 15 crore gain, and I invest all that 15 crores into a new property. All 15 crores were exempted. Let's take another example. I'm an ESOP holder, or I'm a new generation entrepreneur. I sell my shares, make a capital gain, and I invest all that gain into a property which is worth whatever amount. All that capital gain from selling of ESOP or shares was tax exempt. What they have now said is that up to 10 crores of gain will be tax exempt. So if I have 20 crores worth of shares, and my cost is 1 crore and my gain is 19 crores. Earlier, I could invest all that 19 crores and buy a house, and I would be tax-free. Now, 10 would be tax-free, and on 9, I will pay full tax, which means I'll pay, under the old regime, 42% tax. My tax cost goes up by 3.5 crores.
On a lighter note, that's a good problem to have, right? The point is, percentage of people
high income earners have got some benefit on the surcharge being lowered. But on the other hand, if they make money by selling their shares, the capital gains they make is going to be taxed more. They cannot escape by buying property.
Just one thing, Mr. Kanabar, this insurance, just to come back to insurance, it says this will not affect the tax exemption provided to the amount received on the death of the person insured. So this then exempts.
So that would be only ULIPs and things like that which will get exempt, which will get challenged by the term policies. So if you've got a fixed, so there are policies, for example, where you pay a single premium, and you get the money back after 10 years, 15 years. All those policies will get
be impacted, but not life insurance policies.
So just in spirit, what they have done across both, whether it is MLDs, whether it is insurance, whether it is capital gains, they have removed the arbitrage. So if something was otherwise taxable as income and you were treating it as exempt or capital gains, they've gone back and said, we will see through it now.
Okay, I just want to go to
Sajid because he's been waiting by patiently. Apologies, Sajid. I wanted to ask you the subsidy amounts. They have, of course, the revised budget has increased it from 1 lakh to 2.25 for fertilizer. Food has gone from 2 lakh to almost 3 lakh. But for the coming year, they've both been reduced. Do you think all those are legit reductions?
So Lata, remember we spoke before the budget that the reason that you could have your cake and eat it too, right? Increase certain levels of expenditure and reduce the deficit is because there were going to be large subsidy savings this year. And if you look at the numbers, the savings actually 0.7% of GDP. And that's what allows the government to both reduce the deficit and increase expenditure net of subsidies, which has gone up from 13.3 to 13.6. Let me make 2 points, 2 quick points. One is the quality of spending has improved in the last 3 years, but keeps going up. Even net of subsidies, revenue expenditure is coming down, capital expenditure is going up. To understand how much this has changed in 4 years, 4 years ago, the ratio of revenue expenditure net of subsidies and interest to capex used to be 4. In this budget, it will be 2. It's halved in the last 4 years. So the quality of expenditure is going up. The only area where I'd be a little bit cautious is on the tax side. We now have more data. So if you look at nominal GDP with 10.5%, maybe a little high, but is reasonable. But the tax buoyancy that's assumed after taking into account this year's, the tax cuts, is about 1.2. So 1.2 is the same as this year, and maybe there's a little downside risk to that tax number, but there's enough padding on the expenditure side to make that up if it doesn't materialize. That's the only number I'd be focused on in time to come.
Your kosher with the tax revenue buoyancy that they are assuming?
So our own numbers are lower. Our own numbers for nominal GDP and for tax buoyancy are lower because this is a year where both growth will slow and the deflator will be slow. So nominal GDP is going to be much lower. So we have lower numbers, but that's a quibble. There's so much uncertainty, on prices, on growth, that we'll see where it pans out. But that's the one number I'd be looking on because it's been 1.2 this year. I would have liked to see a number closer to 1 next year. The government's assumed about 1.2. But, there is padding on the expenditure side in case that doesn't materialize.
Okay, by the way, the market has come off quite a bit from the highs. It's down almost 180 points from the highs of trade. We hit about 17,970 and now the market is off quite a bit. There is, of course, a little bit of disappointment with the divestment target as well. We'll talk about that in greater detail on the other side of the break. Let's take a short commercial break. Our discussion continues on the budget announcements in just a bit.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
Everything we know might well be at risk. The time to act is now. We must all be champions for sustainability, for the earth.
When you live up to expectations, then winning people's trust is possible. And trust results in Bandhan, like Bandhan Bank, India's fastest growing bank. Bandhan Bank, aapka bhala, sabki bhalai.
It's the electric SUV with the fastest acceleration in India. It's the most spacious in the C segment. And it can be yours now. Starts at Rs 15.99 lakhs. Bookings open on 26th January 2023.
What if you were an apparel company facing an avalanche of demand? So you call IBM to automate your IT infrastructure. And now your e-commerce platform can handle spikes in orders. Let's create IT systems that roll up their own sleeves. IBM, let's create.
अम्यूजमेंट पार्क तो बंद है।
the all-new Slavia.
रेणु, लोन हो गया। बस अब सिर्फ मार्जिन अमाउंट का सवाल है।
यूनियन बैंक से गोल्ड लोन लेकर होम लोन के मार्जिन अमाउंट का पेमेंट कर सकते हैं हम।
एक मिनट, तुम्हें कैसे पता? मैं यूनियन बैंक से ही होम लोन ले रहा हूँ।
पापा, हम अपने नए घर में कैसे रहेंगे?
अपनी नई कार में।
और ये कार लोन भी यूनियन बैंक ऑफ इंडिया से?
हाँ, अब घर और कार का सुनहरा सपना साकार।
यूनियन बैंक ऑफ इंडिया, अच्छे लोग, अच्छा बैंक।
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV. Drive what drove India electric.
Axis Mutual Fund presents Axis Business Cycles Fund NFO, an opportunity for you to be a part of India's growth story. NFO opens February 2nd. Log on to axismf.com or speak to your mutual fund distributor or registered investment advisor today. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.
Powered by LIC, हर पल आपके साथ. Co-powered by Century ProWood MDF, the wood of the future.
Well, the mood is buoyant here at the Confederation of Indian Industry. We are coming to you live from the CNBC-TV18 budget headquarters. With us, Tarun Bajaj, our budget editor, continues to be here. Rajiv Memani and Chandrajit Banerjee from CII joining us now. Rajiv Memani, let me come to you first. And let's address that big change that's happened as far as the new tax regime is concerned on the personal income tax side. A, do you believe enough sweeteners on the table to actually get people to shift now? 3 years, people haven't moved. Do you believe this will be the inflection point? And how meaningful are the changes?
So I would say that for income levels below 15 lakhs, 20 lakhs, I think this will be a meaningful change. And I would say for income levels above 5 crores, this would be a meaningful change. For people in between, a lot will depend on whether they are paying HRA or not. It will also depend on how many of them are availing ETC benefits or not. So I think, so I would say that it will not be probably as flat as it was earlier. There will definitely shift happen. But if the finance minister is assuming a shift of 35,000 crore, I mean, if I'm assuming the large part of that revenue foregone is that, then I think that seems to be a higher number, because that's almost like if I assume that the total personal tax collection is going to be 9 lakh crores, then I think that number seems to be on the higher side. So I personally feel that they may be slightly optimistic, but it's in the right direction, because I think it simplifies a lot of things, and probably it gives some more money in the hands for consumption. Because you don't have to just invest for the sake of investing. You can actually consume, and you can make the choice of the investment that you're making. If they would have added something on medical, I think that would have been very good, because I think that's a real contingency that people face these days.
Tarun Bajaj, let me address that issue with you. And I know that you would have probably done a lot of scenario building on if you move to various slabs, what the implication and the impact would be. In light of the changes announced, do you see that number of people moving to the new tax regime, even though the new tax regime is now the default tax regime? And again, how much relief will people get on account of this change if they do switch?
So I think the FM had given two examples of different income levels where she was showing that people will be benefited. Now the fine print will have to be seen, and what Mr. Memani is saying between 20 lakhs to 5 crores is some people may not shift if they are taking too many exemptions. But I think overall, if a larger proportion of people come into this regime, then the government, if it finds that there is a certain segment that is not come in, they can work out a process for that. On the 38,000 crores...
35,000 crores.
35,000 crores, which Mr. Memani was saying, I would say she would be absolutely right, because the kind of revenue that the government generates from people getting income below 7 to 8 lakh crores will be around that amount. So now if people are not paying any tax till 7 lakh crores, so that amount will be for...
7 lakhs. 7 lakhs.
7 lakhs.
Yeah.
So earlier, I can't remember exactly, but people getting an income up to 8 lakhs or 7.5 lakhs or 8.5 were paying tax to the extent of about 35,000 crores. Now that will be absolutely foregone, and there would be some other relief also that is coming up. So if the revenue implication is 35,000 crores, I think they've done a good job, in a sense that whenever you change from one regime to another regime, you can't say that I'll be 0-0. So the government has said 35,000 crores we'll give. It'll make it much simpler. I'll not go through this maze of various exemptions and deductions. And anybody who gets higher income pays higher taxes. Somebody who's getting less income pays less taxes. I think that is the way forward, and that is the way that the government is
There
going.
have, of course, been some changes being made there as far as senior citizen schemes, etc. are concerned also, and for women specifically. But Chandrajit Banerjee, I can see there's a big smile on your face, and that seems to reflect the mood here across industry on back of what the budget has delivered.
So whatever we were talking before the shows and over a period of time with you and to the North Block, it seems to have been well heard. You know, a few points like if you really look at the fiscal prudence that we had talked about.
Speaking to the right channel.
So our channel was correct, channel of communication. But seriously speaking, I think we spoke about fiscal consolidation. We see that. We see consumption demand being boosted. We see that. We talked about do not let down on capex. I think that was something where we were cautiously optimistic, so to say. But we are very happy. And if you really look at the economic survey, the credit offtakes, it also shows that private sector definitely is not, you're not taking the entire credit offtake cannot be for OPEX. It is definitely also going into CAPEX. So there is private sector already coming in. So that really boosts the private sector to come in much further, the crowding in effect. I like certain other focus areas. I like the focus areas on urban infrastructure. And I think that's very important when you talk about, when the finance minister said this is a budget for the Amrit Kal. So to look at urban infrastructure, it's a very good, very important focus. Sustainability and green, and really looking at even green products, electrolyzers, battery, all of that, you know, gets a real boost. And there is focus on R&D and technology. So for an economy of our type, which is really aspiring to be developed, these are focus areas that we were all expecting. So
yes, a new program for research and innovation, but we have to, of course, again see the fine print for that specifically. Rajiv Memani, what was the standout for you? I mean, we've all discussed capex and all of that, but as far as the fine print is concerned, what's been the standout, both positive as well as what may be a disappointment?
No, I mean, there's honestly no disappointment as
The folks at Camellia and Aranya may be disappointed though, right?
I don't live there, so I can't say, but yes, I think I won't say it's a disappointment. I think they've still kept it at up to 10 crores, you know, that benefit is there. And I think given the fact that the number of people who are availing that benefits, I think it was probably high time that...
We're talking about high-value residential accommodation and the exemptions that have been changed in this budget. That is what Rajiv Memani is talking about.
I would say that if anyone is contemplating sale of shares to buy real estate, then I think they should try and finish that in the next 2 months. I mean, that would be the recommendation.
Free advice coming in on CNBC-TV18 from Rajiv Memani.
I would say overall the positive is that, as Chandraji rightly mentioned, I think the quality of fiscal deficit continues to improve year after year. I think that's one big positive. And I think as the trend has been set by earlier revenue secretaries, I think it's very... I don't want to name anyone.
You can compliment him. He's sitting right next to you.
I think the projections have always been super conservative. So, you know, year after year, the RE or actual, in fact, there was an 8% gap between RE and actual last year. And this year also, I think the BE and RE gap, you know, I think if you're looking at 30.5 lakh crores, that's a good lift over that. And the projections that they have made for next year also are conservative. I mean, 12-13% growth on direct tax, on sort of overall tax revenues, seem to assume a tax buoyancy of roughly 1.1, which is pretty conservative. So I would say overall, all positive. And this transition from, you know, from the old regime to the new regime, insofar as the direct tax, personal tax is concerned, in a moderated basis, I think is a good way rather than doing it suddenly.
Yeah, absolutely. You know, it's very rare that government officials get compliments from industry, especially on the government doing a good job as far as credible numbers are concerned. But, you know, jokes aside, I think that is the consensus that over the last few years, that has been the story as far as the budget is concerned, that the numbers have been credible, the process has been transparent as well. You know, I want to understand from you, the thinking behind ensuring that you actually deliver credible numbers that people now today are talking about and respect?
I don't know what was happening earlier, but I would say budget making process is a very complex process, and everything is linked to something else. So at least the three secretaries who sit in the North Block have to be talking to each other every day, every moment at the time of making the budget. So there's no point of showing higher taxes, showing a lower deficit, and then achieving the other way around. So we were very conscious of that, and if we were blamed for showing lesser revenues, that also gave us that cushion for things that came up as surprises for expenditure during the year. We were able to cope up with that, and there has always been a confidence in the political executive as well as the executive that we will deliver on the fiscal deficit, which has never been so easy. Especially now that we don't have that proviso where we do extra budgetary and those kind of things. Earlier we were...
It's down to zero.
It's down to zero.
It's down to zero, and I don't know how many people have noticed that, but it's actually down to zero. Yeah.
So that's very important. Earlier, if I would say it's going up by 0.1, I would tell him, okay, take this under the carpet. So now that is not available, so I think kudos to the team.
Kudos to the team. Chandrajit Banerjee, you know, on disinvestment, while some would argue that perhaps the government should be more aggressive, the disinvestment target at 61,000 crores, pragmatic and realistic, given the experience that we've seen.
So what has been saying that we need to have disinvestment focus, definitely, but we need not have disinvestment targets which we never meet. There's no point in keeping a target and not meet. It's good to under-promise, or rather realistically promise, so that we realize it, and then we have the roadmap for it. And I think 61 is a good number, a very decent number given the status of the economy. And I think if we are able to achieve it, implement it, get it, I think we are on track. The last time we achieved it was quite a few years back. So let's come back on achieving the number.
Well, let's come back on achieving the number. And, you know, speaking of numbers, as we've been pointing out, there has been a big drop as far as the subsidies are concerned, whether it is food or fertilizer, and that is providing that additional cushion for the government. 45 lakh crores, that is the expenditure target that the government has put in place. 464 on the Nifty Bank. Markets continuing to hold strong, of course, have come off their intraday highs, perhaps some profit booking that we are seeing. But Rajiv Memani, Chandrajit Banerjee and Tarun Bajaj, many thanks for joining us here at the CNBC-TV18 Budget Headquarters. We're going to take a quick break and be right back with you. Budget coverage continues after the break.